Hi everyone, my name is Dawson. I'm the CTO at Bankless Labs, and I am here to help moderate this panel about the future of DeFi. So we have three hotshots here in the industry who work in DeFi. We're going to discuss the current and future trends of DeFi. Let's start with some intros. If each of you could say your name, who you work with, and why you're into DeFi.
Mic check, 1, 2. Okay, great. Hi, everyone. I'm Andra. I'm head of BD at Origin Protocol. We're building an LSDeFi product called Origin ETH. I've been in crypto for about 6 years, in DeFi for 3. Prior to Origin, I was head of growth at 1inch. And I work in DeFi, well, first of all, it's awesome. For everyone who works in this space, you guys know how amazing every day is. It's just a roller coaster of very high highs and very low lows. Which I appreciate very much. And yeah, I love everything about DeFi, you know, the sort of freedom, the remote aspect of, you know, being able to work from everywhere, the sense of community that we have in a space, the innovation, of course, that we bring, and just seeing everyone get excited about something new, something fresh, and exciting. So.
Hi, everyone. I'm Madalina. I am a software engineer. My background is in computer science, but I specialize in human-computer interaction. I have worked as a software engineer for trading and portfolio management applications in traditional finance at BlackRock before. And since last year, I have moved towards a more decentralized scope. Since last year, I joined the team building Vega protocol, which is a blockchain for trading derivatives, which allows for permissionless market creation.
Hi, I'm Tina. I work at EigenLayer. I primarily work on product and governance. And previously, I also used to work on product and design at Element Finance, but is now called DelveTech. That was a fixed and variable rate protocol. And prior to that, I was working in the wallet space. And similar to our panel, I used to work in banking and traditional tech as a front-end engineer, so traditionally trained in computer science as well.
Excellent, thank you for the intros. Let's get a round of applause for everyone up here as we start. Okay, and as far as passing the mic, we can do popcorn style. Whoever feels like they have a good answer or wants to speak about it, you could just pass. So let's go ahead and start with talking about DeFi tokens and the value of DeFi tokens. So if we look at a graph of the DeFi token prices out there, for instance, the DeFi Pulse Index, it's down bad. We're definitely in a bear market, right? And it's basically just a red mountain you can imagine going down a lot. Do you find that the value of DeFi tokens relates to the value of what's actually happening in DeFi?
Are we supposed to talk price action? But that aside.
It's not investment advice either way. And yeah.
But that aside, no. So it's all about the value that you add and what you're actually disrupting. So if you look at the underlying protocols, they worked great. You know, there's this perception that crypto failed and that everything imploded and everything is awful and that look at us, we're losing. But actually, no, it was centralized crypto that failed, whereas DeFi performed great. All the blue chips in DeFi are and were still doing great, even when you know, Celsius, Voyager, FTX imploded last year, but you could still borrow and lend without a problem. You could still, you know, sort of do all sort of decentralized exchange activities like trading and looping and whatever else. So DeFi, as far as value add, worked fine, and that did not necessarily translate into price of tokens because maybe we have more speculators than we have actual users. That, together with the institutional flow that kind of exited the space, you know, during the sort of FUD season, to say so, didn't help the price action. But I think that given a long enough period of time, we're going to see that price recover and as protocols continue to grow in the next decade or so.
Yeah, so to go to the root of your question, do we think these market prices reflect on the success of the ecosystem? I do not think so, because Coinbase trading volume actually is down 64%, and Coinbase would be seen as one of the most successful companies within crypto. And this isn't because crypto is not successful, but because inflation rates and crypto assets are still seen as these risky assets. And in these more volatile markets, investors are less likely to invest in risky assets. So taking a step back, it then is establishing why are crypto assets established as risky assets? And then how do we move towards establishing cryptocurrency assets as being safe? Is this through wallet management? Is this through stable coins that are more, that don't have indicative situations that had in the past year that we had for the stable coins, and taking an approach like that, and also kind of considering that, like was mentioned previously, market prices may be a indicator of success, similar to corporate shares in the Web 2 world. But if we look at infrastructure providers in the space, it's actually the number of integration partners, the developer traffic, and the way that that infrastructure is used in crypto as a whole.
I can add a question on top if you'd like. So when it comes to the prices now, I feel like we've addressed it, we've got it out of the way. DeFi is down bad as token prices, but not as technology. Technology is definitely seeing a resurgence. All of us are in this scene for a reason, right? It's when the most interesting things are being built. I'm curious what you think might be missing within DeFi. So we've got trading, lending, yield, derivative markets. What else is missing at the core primitive level? And if you don't see anything missing as a core primitive, what would you want to see more built on top already?
That's a very interesting question. So you mentioned the core primitives being built. One core primitive that I can think of not being yet drafted is decentralized insurance, I think. I'm not sure if there are any projects that are trying to explore that a little bit more. But regarding these core primitives that you just specified, I don't think they are fully exploited, and it's unlikely that we have fully exploited them. You mentioned staking, you mentioned derivatives trading, and for derivatives trading, for example, this is an example that's more familiar to me. I think we haven't been able to trade derivatives in a fully decentralized manner on any sort of market since 2 months ago, actually. So Vega, the protocol to which I work on, for which I work for, it's basically, it has launched the alpha mainnet less than 2 months ago. And after 4 years of building and research, it finally enables trading in a fully decentralized manner any sort of market that gets proposed and voted by the community. So I think that is something new, a primitive that hasn't yet been fully exploited.
I was also going to go down the derivative route. If you look at the notional value of derivatives in the real world versus DeFi, where we have a long way to go. But aside from that, the beautiful thing about DeFi is that we don't know what's yet to come. I don't think anyone saw LSDFi coming as a thing. I mean, Ethereum to begin with, who saw that coming, right? And then Ethereum staking, and then financial applications for Ethereum staking. That's just like a whole new level. So we don't know what we don't know. And that's the beautiful thing about the space, is that innovators are going to innovate, and we're going to be surprised, and the next amazing cool thing is going to come up, and we're all going to jump in and explore that.
As we pass it over, I did want to comment real quick. For those who don't know LSDFi, that's liquid staking derivative DeFi. So it's like a term on top of a term. And Eigenlayer is a great example of what could be possible as well, with especially extreme leverage, for instance, with LSDFi. Could be possible.
Yeah, so I'm going to disagree with the panelist and say that I don't think we actually have product market fit yet for a lot of derivatives in the space. And a lot of the consumers don't actually understand how smart contract derivatives work. And I think back to your point, Madalina, about insurance, I think the next innovation is going to be crediting and prime brokerage, because this is going to bring mainstream adoption. And also the innovation that is being done for wallets right now, for smart contract wallets, how can we program and automate transactions so people can be doing private transactions, like the the presentation that was done prior about ZK proofs, and how can we apply that technology that is helping with private asset deployment. Espresso Systems is a really good example of this, their Kate product. How can we have people automating escrowed transactions for AMMs? How can we have AMM positions that are completely automated so that people don't have to be checking it every hour? Because I know that myself included and a lot of friends, we are not full-time traders. So how can we have a DeFi that's actually sustainable for people like everyone in this room, where it's allowing you to maintain this portfolio, but you know that it's similar to your traditional banking account, where it's safe and doesn't have a level of risk exposure, but it's sustainable for you to use.
I like the direction we're going in right there, actually, and I think we could take it there, which is, it sounds like you think that the future could be in that these products are safer to use, easier to use for the everyday person out there. Do we think that is what is going to make this mainstream? Or is it going to be that more and more people become DeFi crazy like we are? And what would it take for it to become more mainstream? What tools are missing right there for the everyday person to get onboarded safely?
In my opinion, I think the reality is, and what would make DeFi more mainstream, is actually designing for both traders and the average user, making things more usable, and I totally agree with that, but also making an amazing space for market makers. And the way I would see it would be exactly as you mentioned. I would see it being able to trade stuff like real-world tokenized assets or real-world markets. And I think we still need to find the proper tools for that. And I do imagine institutional investors as well being very attracted to this opportunity. And I think we have a responsibility to trade for both. For both the average, to design for both the average user, but also the market makers and those who actually would provide liquidity to those platforms.
All right, so the question of mainstream adoption in DeFi, I don't think that, I like to segment the market hard. I think the future is not just like a couple of boxes, but like a bunch of boxes. We're getting more and more sort of diverse, and users have preferences as far as how they want to use protocols. I think that some DeFi is going to work in the back end, and the interface level is going to be a very Web 2 experience where you're not necessarily doing everything that we're, the hardcore DeFi people, are used to, validating transactions and swapping on multiple dexes and switching between different chains, etc. So that's going to be fully abstracted. I think that the DeFi natives also will have their own applications and their own sort of protocols that they work with and play with, and some are going to be like privacy, like hardcore, and others are going to be a little bit more lenient. For the institutions, I think we're going to have garden environments. They cannot participate. Again, depends on which flavor of institution, right? A bank is different from a crypto native fund, and they have different preferences, different needs. A bank cannot touch a mempool that has transactions from, let's say, adult content that's validated, in the same mempool. So they cannot touch any sort of permissionless blockchains. So that's like one thing to consider. So I wouldn't say that DeFi is like one future for all. It's just like, who are we targeting? What kind of market is it? What preferences do they have? And then going to the like psychological persona of that user.
I am just going to say wallets and stop there. Reason being is to give the audience kind of background. The average DeFi protocol probably does 100+ white glove calls with institutional and DeFi native LPs. Every single one of those LPs have to go through a white glove deposit process with who's traditionally the BD lead of this DeFi protocol to onboard onto the protocol, and then also be aware of the positions they're entering and deposit and go through a deposit process. this process as a whole, it requires multiple smart contract interactions and authorizations for their wallet. If white glove services and onboarding was completely either permissionless, automated by a smaller selection of transactions, and also permissioned to be automated for a certain period of fixed terms, that would enable a whole new period of LPs to engage with DeFi protocols that don't need this white glove service. I also think that a lot of the innovation being done in the space for wallets and smart contract interactions that Capsule was actually speaking to, that can help with grouping the authorization of transactions for DeFi users, and then also automated transactions for a potential MEV market. So I truly think that wallets are the future of DeFi.
Okay, keys in the hands of everyone. So as we come to a close here, I have one question about not just the future of DeFi, but the future of this industry. So if we look back on the last cycle, one of the main hype starters was DeFi, but then kind of the tail end or middle was actually NFTs. And there's NFT-Fi as well, we haven't even gotten into yet. But when it comes to those two aspects, and now what each of us is kind of seeing in the industry, do you think that DeFi will be a part of the next bull run, the way it kickstarted the last one? Or do you think that it is a thing in the background that just needs to exist for the next bull run to have the tools necessary? What do you think the next bull run will be?
All right, so next bull run, I think DeFi will definitely be a part of it. I don't know if it's going to be main character or not, but most likely, yes. I personally haven't yet seen what else could be. Well, obviously applications on top of, right? And then are we considering those to be DeFi or not? But I think DeFi is here to stay for multiple cycles. I don't think it's going to go away. It might transform over time. It's going to take different shapes on different chains, different layers. Yeah, I think it's here to stay. We might get new things along the way, like I already said. We don't know what we don't know yet. So the same way NFTs sort of came out of nowhere and took the spotlight for a bit, the same way other things are going to come out of nowhere. Depends on how much alpha you have. You might have, a bit of a peek into that. And yeah, so that'll be my answer. My answer would be the next bull run, and as well as multiple bull runs, are going to have DeFi as like at its core. Infrastructure was that, 6 years ago when I got into it? It was all infrastructure. There was no DeFi, so it was all about developers and building the core sort of layers, and then DeFi took place. But how could it go away since now we're building the building blocks on top of it? I feel like we have so much more to build, so we're just getting started.
I do agree. I do agree very much with your view. I think it's going to participate. DeFi is going to be in kind of every bull run. That's how I would see it, because there's so much more to build on top of it.
Yeah, I do think the last bull run was fueled by DeFi, Uniswap, Compound. I remember food farming, if everyone remembers that. Yeah, the yams. And I think what the next wave that I'm seeing is happening is and why I love EigenLayer is being able to use existing positions or assets for another position or protocol. And I think right now, across smart contract vaults, across protocols, across chains, as we have more cross-chain interoperability, the biggest issue we have right now is liquidity fragmentation. And as we see these new primitives coming out, where we now have the ability to use an existing asset or position and reuse it for another purpose, I think that's going to be what's fueling the next DeFi run.
Okay, let's get a round of applause for all the panelists here. Thank you all for coming out. Thank you all for joining.